Hello, everybody. This is Brandon from Galaxy Doc Market. Today is July 17th, 2026. It's about 10 a.m. as I bring you this video and just an update on what's going on with Wells Fargo and kind of see where we are at with this banking situation. I have always maintained that the banks are going to be staying insolvent as long as the 10-year yield continues to rise and that the Fed is unable to bring down that yield as measured by TNX down into the 35, 36 level. Let's get right into it. Here is the disclaimer. Please pause it, read it. If you agree, please move forward. Shameless plug for my x.com/galaxy.market. A lot of discussion goes on there, and I post some pertinent data and what others may have to say to help you with your investments and trading. All right, so this is the one. The Wells Fargo reported earnings, and everybody, if you haven't heard, they were just taking out a loan of $200 billion to just to stay afloat this quarter. Whenever a business has to borrow money to stay afloat to fund the operation, that business is insolvent. Okay. And the rumbling is that Citibank, as well as Deutsche Bank, as well as some of the regional banks like Comerica, are also in the same predicament. And I want to talk about why this is the case. Okay. But remember, borrowing money, let alone $200 billion to stay afloat, basically means that business, whether it's a bank, a liquor store, or your small mom and pop shop selling something, is functionally insolvent. And Wells Fargo has always had problems with their, question of solvency. And now this is basically the canary in the coal mine. And this is because why? What's going on? What is causing all of these issues? Well, let's look into it now. Okay. So one of the things that we want to look at is the following right here, is that SLV is an ETF. And I always say ETFs can be great for trading, but it's not as basically when it comes to precious metals, ETF, you don't really hold anything or own anything. It's just a kind of a derivative of what you have. But regardless, people like to trade around these ETFs, and SLV is the silver ETF. And one of the things that striking right now with the advent of the silver spiking to 39 before the slam crew came out, trying to slam this thing down, and I'll give my opinion and factual data on what I think is happening. The borrowing cost of SLV is through the roof. And essentially what's happening is there's zero shares available to short SLV today and yesterday. This came out about 10 hours ago, but it's still the same situation today. Okay. What that means is that the delivery requirement of the physical silver is going through the roof at COMEX and LBMA and other precious metals exchanges because people are demanding proof and delivery of the actual physical silver and gold for that matter. This is problematic because the banks, the big banks, right? Central banks, JP Morgan Chase, Wells Fargo, Bank of America, Citibank, Deutsche Bank, whatever the case is, they are all a consortium that I refer to as the slam crew. And they have been slamming, over 486 million shares of, not shares, but ounces of silver in an effort to bring the prices down and prevent it from breaking above 40. Like I've always said, if it gets above 40, we're going to see 50 plus really quickly. And this is what they've been doing. In the past, this level of slamming action would have brought silver from 39 all the way down to maybe 30, 29 level. And that's not the case. What we are doing, we're going to go over a little bit of the technicals. We're holding right at the pivot level, and the slam crew are now panicking. And the fact is that they use various instruments, which is beyond the scope of what we're talking about. But SLV is one of the instruments that they use to short and bring the prices down on silver market because they are interrelated. Okay, so silver delivery demand is causing silver, basically what I call unobtainium, the shorts, for borrowing. If you can't borrow, you can't short. Okay, this is what's causing the cap in the ability of these slam crew to bring the silver prices down. The other contributing factor is that all banks hold as investment assets basically U.S. Treasury bonds and various formations of it. And basically, despite the Fed's efforts, they have not been able to bring it down below this 42.05. In fact, with unprecedented Fed efforts, they have been printing money to buy back the bonds that they issued. And the age-old question is, how does a for-profit private bank have the ability to print money for a sovereign country like United States? Think about that for a minute. There's nothing federal about the Federal Reserve Bank, and I agree with Trump, although I think he needs to take it one step further and end the Fed. Instead of talking about firing Jerome Powell, they'll put the next flavor of the month in there, and they're going to do exactly the same thing. Okay, but this is the problem for banks, is that they're sitting on their investments, which is underwater. The higher the yield goes, the more worthless their bonds become, and there really is no demand for U.S. bonds anymore. Everybody knows the end game is here, that we can't print money to oblivion, and that there's really nothing backing these debt instruments, which is what the Treasury Yield bond is. You're loaning money to the United States, which is the biggest debtor nation in the world. As a consequence of that, banks like Wells Fargo, because they're participating in the silver slam and gold slam scenarios, who knows what else they're doing. Maybe they're part of the fabled plunge protection team. In the past, that would have been conspiracy theory, but we know that exists. Okay, just look at our, S&P 500 and Nasdaq. Trump's got a hold of that magic wand, doesn't he? Okay, but that is also a consequence of the stock market rising to the amount of money that's being printed. Without you knowing, a permutation of offshoot of quantitative easing is happening, right? But the markets are not really responding other than the stock market inching higher every single day. As it relates to Wells Fargo, because their assets are underwater, because the deposits are coming down, because people aren't depositing as much money, small businesses are dead, right? If in a booming economy, yes, deposits will go up, because in a fractional reserve banking, you could take in $1 in deposit and lend out $10. But there's no demand. Nobody's opening businesses. Everything's slowing down. We have a global deceleration in growth, and I believe we're heading into deflation at this point. But this explains what's going on, okay? Wells Fargo is participating in the slam crew activities, all at the same time. Their 10-year Treasury bond, rising 10-year yield, even though they're trying to slam it down this morning, it's going to go straight back up. All assets on banks' balance sheet is insolvent. When you borrow money to stay afloat, which means that to fund operations, you are bankrupt, folks. All right, so here we are this morning, and I wanted to illustrate this point. Since hitting 39.57 on Friday, the slam crew came up, and basically we're making series of shorter and shorter bear flags. And now we're basically, these two lines right here are our support and a channel in which we're going to be chopping around. The slam crew needs to be able to close and get below this red dotted line. Once we get below here, they may succeed in getting below 36.50. The problem is that they've basically shot their wad to a point where banks like Wells Fargo is saying, hey, we have to borrow money because we blew everything on slamming, and also our assets are underwater. So I still stand behind my theory that either by the end of this week, which is tomorrow, or sometime next week, we're going to be blowing past this $40 level, taking out that all-time high. It's just under 50, 49.95, I believe. And I don't think it's going to stop there at 50. Okay? So that's kind of what we have. The silver slam crew is not having the effect that it desired. Really, with that unprecedented level of, riggery, I like to call it, they are only able to bring this thing down maybe $1.60. Okay, in the past, this type of intervention would have taken it right below this red line. This red line, trend line, exists because this is what they want to get below. Okay, and then make the bank's balance sheet look pristine. But Wells Fargo is telling you they're not okay. Okay? They are basically insolvent. So, the Black Swan event that is happening, Wells Fargo, Citibank is also chirping about that situation. Bank of America, I didn't put it here, Comerica, Deutsche Bank, JP Morgan Chase, BlackRock, they are all participants in the Silver Slam, and they all hold 10-year Treasury Yield because that's what banks can hold, as debt instruments, as an asset. Okay, because is U.S. going to default now? Yes, they are going to default. I believe Trump is setting up United States to declare bankruptcy. His actions are clear. Okay. And if you look at what's happening also, and I've been talking about the monetary regime change, and we're going to talk to you about this situation right up here, and I posted this on Twitter, is that all-time highs in January, okay? While the rest of the coins, like Bitcoin and everything else, is kind of underwater, XRP is threatening to take out this all-time high right now. Why would that be? Because Ripple just got charter as a national trust bank. So they are a bank now, the parent company of XRP. And also XRP is now transitioning into the SWIFT system, and I think they will replace that. Regardless, this action is telling you that the monetary system change into the central bank digital currency is happening. And if you haven't noticed, the debate and the laws that are trying to be passed, and the Republicans and Democrats going at it, is to introduce the central bank digital currency. And basically, my belief is that they're going to basically create a digital currency system that is backed by gold. Okay. So banks funding their operations on borrowed money, that's a recipe for disaster. That is the black swan. It just hasn't manifested yet. It's just a warning, folks. Okay, so last week I talked about silver is going to 50 plus imminently, and I still stand by that. Okay, and the suppression tactics mastered by Blythe Masters, I mean, that's what they're employing. It's not working as much anymore. Squeeze is coming. We know that it's hard to borrow SLV. And we know that Wells Fargo is part of the Slam crew, borrowing money, $200 billion to fund current operation. That basically means that they don't have free cash flow. Why would they do this? Because silver is the kryptonite, and they're going to try to rig and slam down silver as best as they can, and they're failing, folks. Banks are insolvent. That is the prime message, and take it for what it is, all right? And, silver is about to break out and have a generational move. All right, thank you so much. That was my message. Follow me at galaxy.market and x.com. I'm also on YouTube. Subscribe us there. Like, share, and above all, comment good and bad. If you want to work with me, you got to email me here and schedule a consultation. Okay, other than that, banks are insolvent. Silver Slam crew is running for their lives at this point. Let's see what happens. Bye-bye.